Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us remotely, we have Rebecca Corbin. She's the CEO of Corbin Advisors. We're going to take a look at corporate management and boards and why they need to lead with action and transparency in the midst of the coronavirus. It's great to meet with you, Rebecca. Thanks so much for making the time to join us. And right now, transparency, action, accountability is really key for corporate management. Tell us why.
Sure. Well, first of all, Jill, thank you so much for having us on your show. We have, through our proprietary research, incorporating over 12,000 interviews with the buy side and sell side, have positively correlated transparency with management credibility. And more than ever in times of crises, it's important for management teams to be as transparent with all stakeholders. That would include customers, employees, partners, and shareholders. And right now, we've seen kind of the coronavirus, COVID-19, move through different phases. And in the last 2 weeks, we've seen a significant increase in companies communicating with the financial community, nowhere near the majority, but a steady increase of companies filing 8Ks, communicating via FAQs, as well as investor presentations, providing updates on COVID-19 preparedness and impact, as well as financial positioning.
All right, and speaking of financial positioning, let's take a look at our first chart here. We're talking about guidance. Clearly, this is one thing that investors are always concerned with, particularly as we're starting to get into earnings for the April season. It's really going to pick up here. What are you seeing in terms of the feedback regarding guidance?
Sure. 92 companies have provided an update on guidance, the majority of which have either withdrawn Q1 and or 2020 outlooks. And so we will continue to see more. The driving factor for pre-releasing, if you will, is whether you communicate quarterly guidance and if there's going to be an impact. And we've seen those companies either update, including reaffirming Q1. There are some companies who have reaffirmed Q1 guidance. They have not been impacted by COVID. We've seen others actually provide a downgrade in terms of their guidance with numbers, or actually take it off altogether, indicating that there's a financial impact. So we will continue to see that as the earnings season progresses. But the quarter has not yet closed. Things are moving around daily for organizations, and unless you have certainty around your numbers, there's not an impetus necessarily for you to communicate, because you do not know what that material impact is going to be.
Yeah, it's really interesting. A number of the strategists I've been speaking with, when you look at it, hindsight being 2020, the lessons that were learned, as painful as it was going through 2008, 2009, it's almost a good thing now that companies, especially the banks, are more well capitalized and have learned lessons from the financial crisis. Let's move along to our final slide here and some selected strategies that you're looking at for public companies.
Absolutely. We've been fairly bold in our guidance to companies because of the research that we conduct. And that means developing strategies around worst case scenario, a prolonged recession. And I'll tell you, up until 2 weeks ago, I was having conversations with CEOs who were believing that this thing was going to turn around in 2 weeks. Having lived through the crisis, we felt that it would be longer than that. So truly understanding your business from an internal perspective and managing through that and making those tough decisions now, and or at least developing the plans to be able to understand at what point do you have to go into your downturn playbook, in terms of phase 1, phase 2, phase 3. And also to remain open and accessible, and even for investor relations officers who may have to say, unfortunately, I can't answer that question 90% of the time, the fact that they are open to engaging with investors and helping them to understand their story and what their company is going through is absolutely best practice. And of course, we're heading into earnings season, and these are going to be very complex calls. And there is an opportunity for companies to really effectively communicate on these calls, meaning that they're not going to treat them the same as business as usual. So what we're recommending is, prepared remarks should be at least 25 minutes. Have an earnings deck that you create that is actually used as the anchor for communication, not as a supplemental communication, but it's actually on the webcast. And the third is to consider providing supplemental information, such as an FAQ that provides responses to questions that you've been getting from investors ahead of time, so that the call is a much more informed engagement.
All right, Rebecca, Awesome insight. Thank you so much for making the time to join us.
Thank you so much, Jill.
All right, and thank you for joining me on
Take care.
Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.